right now, I think in commercial real estate and investing, cost segregation is a big buzzword.
Amazing.
But I don't think too many people think much about it or know much about it.
Yeah.
I mean, I'll be honest. I know what it is, but
essentially, the IRS looks at a building to say you can depreciate it. It's worth 0 in 27.5 years. It's the same. It's the same if you're a baker and you buy an oven. The oven's $1,000. Eventually, that oven's going to be worthless. The IRS says that oven's worth 5 years. So you get to deduct and depreciate that all the way down to 0 in 5 years. It's the same with a property. You get 27.5 years. And it's in its straight line, which means it's just the same every year for 27.5 years. Yeah. What cost seg does is they say, well, wait a minute. Well, within the building, there's different products and stuff you have on walls, and you have, you have water heaters and all that. Those water heaters don't last 27.5 years.
Yeah.
So why don't we take each cost segment of the property, and we'll accelerate all the pieces of it, right? And all of a sudden you're like, wait a minute, I get a bigger deduction because the water heater is it's only lasting 5 years.
Yeah, your roof versus your parking lot.
So it's absolutely brilliant.
Yeah.
It's the stuff that people just don't really think about, right? Mm-hmm. You could take up to 1,400 deductions when you're a business owner versus a W-2 gets about 10. So the whole code is written to increase our GDP, right?
Yeah.
And so most people don't take advantage of when I look at my friends that are in real estate, they take 3 or 4 or 5. They could take 10 or 15 or 20 or whatever it is.
Leaving money on the table.
100%.
Good.
Yeah. I have a friend, his name is Scott. He's in construction. Didn't make money. All of a sudden he flipped this building that was a miracle, like unicorn. Made a ton of money. He left himself completely exposed, and he comes into my office when it came to tax time, and he looks like he got hit by a truck. And I was like, what's up, Scott? And he's like, I have to write out a check today for 350 G's, and I don't have it. For him, that was like more than he had. So he had to sell his trucks. He had to sell properties. He had to sell stuff to liquidate to make that payment. Mm-hmm. And I said, well, show me your deductions. He had 5. He had 3 or 4 or 5. He had so many he could have taken, but he didn't feel like he needed to.
Yeah.
And he left himself exposed, and that's not the solution.
So you guys work ahead of time coming into the taxes to kind of figure all that stuff out?
We do forward tax planning. So we'll look at a real estate investor, and we'll just say, look at your last year's taxes and see what you took, and more importantly, what you didn't take.
Yeah.
And then we just start stacking up the deductions to offset the income.
Okay.
Like everyone should take the Augusta Rule. I don't know if you golf.
No, this guy over here is the
you
big
golfer?
Yeah.
What do you think of Augusta whenever you hear Augusta? What do you think of? Yeah, the Masters. It's one of the greatest tournaments in the world. I lived in Augusta, Georgia for that time. So it's the Augusta National is 2 weeks a year. 250,000 people descend on it. It is sacred, hallowed ground, right? I snuck out on the course at night, not recommended, because I wanted to see it, and it's the most pristine. You can't even see a divot.
Does it look like bluegrass?
You feel close to God standing there, right? It is the most prestigious. But if you live in Augusta, Georgia, it's not a big town.
Yeah.
So what do they want to do? They're out. They're out in their bass boats fishing. And what do they do with their properties? It's not B&B levels. It's Marriott ballroom levels.
Gotcha.
Of trade. So if you go to peerspace.com, you can figure out how much you can rent out your place, your house to for your business. So they rent them out for $2,000 to $3,000 a night, and there's no shiny buildings around. There's no hotels. So the whole town rents out their place.
Wow.
And they got tired of paying rent. They got tired of paying taxes on that rent that came in. So they went in front of Congress. They got a lobbyist. The lobbyist got a carve out for business owners to rent out their personal residence for 2 weeks a year, tax-free, and not pay anything. So that made it federal. Now it's a code. We can all take advantage of it. So you as a business owner, real estate investor, you can do your board meetings once a month at your own properties.
Yep.
Go to peerspace.com, see how much you can rent it for. It's the happiest check you're going to cut, because you're going to cut yourself that check for whatever that value is, $2,000 to $3,000. We have one client that paid $20,000 to himself, tax free, and that's what you have to do, right?
Yeah.
So those are all the things that, like, no one sits you down and says, "Okay, tax is coming. Why don't you actually lean into it? Take advantage of the code."
Yeah. How about SEP IRAs and stuff like that?
100%.
Yeah. So I set that up for myself 3 years ago because we didn't really have a plan for retirement.
Yeah.
set it up, put auto deposits into a Vanguard account, VTSAX, like
love it
every single month, and in 3 years of just doing a $600 a month deposit, and then at the end of the year before the taxes, doing another matching payment from the company.
Yep.
All of a sudden, like, we have a retirement account over a 3-year period that's at like almost 200 grand.
It's amazing.
Yeah.
Tax free.
And it grows every single year. Because when you're doing it every single month, you're getting dollar cost averaging on when it's up and when it's down and all that kind of stuff. Yeah,
a lot of people are fearful of this stuff. They're like, if I say IRS, it's immediately like, oh, geez.
Oh, I had a bad experience.
Yeah.
And I worked through it, and it's the great. It was like a cloud that followed me everywhere for like 10 years.
Yeah.
And then once you finally get through it, I call it, your financial fitness needs to be like your mental and physical fitness. I always talk about the trifecta. There's 3 areas in your life, and it's hard to keep all of them in balance. You usually have 2 pretty good and a 3rd one that starts getting out of whack. It's really hard to keep all 3.
That's a great.
And it's physical, mental and spiritual, and then financial.
That's excellent.
And a lot of people will focus on the physical and the financial, but then they're mental and spiritual, which includes family and relationships and with God or, you know, all that kind of stuff. That'll get out of whack.
Sure.
Or then they go shift focus to that, and then they let their health go.
Yeah.
And so it's really
like
hard.
Whack-a-mole.
Literally. And if you think about it, you got 2 hands. It's easy to carry 2 things. When you start adding that 3rd, you're like, trying to carry watermelons.
Yeah. But the more you can do in all 3 of those areas, the better you're going to be in life.
And nothing will make you more financially fit than getting yourself in a hole with the IRS.
Oh, 100%.
Because they're relentless.
Yeah. A lot of people will, like, their strategy is not to pay tax.
That is
just, I'm not going to pay taxes.
That's the dumbest
strategy. What could possibly
I've
happen?
ever heard.
I talk to a lot of people. It's like, hey, you realize that's just going to eventually catch up to you, and you're going to have fees.
What do they see? That there's only 2 guarantees in life.
Death and taxes. Yeah, we cover both.
Yeah.
Thank you so much for watching this video. If you like this video, want to catch the entire episode of this Rent Stew podcast, click right here. If you're loving the Rent Stew podcast and you want to see more episodes, click right here. And as always, stay hungry, my friends.